in that case, I will get started. So welcome everybody. Glad you could join us. I am Julie Nelson. I am a board member of the River to Ridge Disaster Resilience Group. And we have been doing a lot of work in trying to get people whole again after the flood of August of 2018. And one thing we kind of learned along the way is the people who were able to recover quickly were those who had some good flood insurance. And I, for one, hate paying for insurance, so I don't want to buy any more than I absolutely need, but if I need it, I want to get it. So we have a special guest here today who knows the ins and outs of flood insurance, and we have Michelle Eng, who is also on our board, who will tell us more about our guest today. Michelle.
Thank you. So Phil Strand is joining us today. He is an American family insurance agent. He had to deal with some of our flood recovery issues as he had people impacted severely by the flood. I can't even remember how many years you've been in business, Phil, but I know you've been in business for quite a while and has offices located both in Viroqua and Westby, and is certainly an advocate for making sure people have the insurance that they need, including renter's insurance, which is oftentimes something that's forgotten. And so I'll turn it over to you, Phil.
All right, well, thank you. I really appreciate the opportunity to talk with you guys today. And again, as I was saying a little bit earlier, it's probably going to be best to be set up as a question and answer format. Insurance, as everyone knows, is a little bit confusing and somewhat boring. And so to just give you this long oratory we need to have a little bit more proactive activity here. So in talking about insurance just in general, much of the property insurance is driven by the banking industry. So when people are having to get a mortgage or secure a loan on their property, the bank will often require that insurance is put in place. The most common way to do that is with a homeowner's insurance policy that provides you with coverage for wind damage, fire damage, lightning damage, hail, if a plane drops from the sky, just a number of coverages that you would be protected against in the event that there was damage done to your home. But the most glaring exclusion in a homeowner's insurance policy is damage done by flood. And it is an expanded definition, so that flood as a very particular event that is identified is only one of the water events that is excluded from the insurance policy. Essentially, the best way to think about it is anything that is on or in the ground from a water standpoint is not going to be covered by a standard homeowner policy. Because we get water infiltration in homes that is not associated with flood, but is still a water event that is not covered by a homeowner policy. And I think that's that's probably one of the least understood or the most misunderstood, is that, gosh, I got all this water damage in my house and it wasn't from a flood, so why don't I have coverage? I can do a very quick screen share here for you. And somebody please remind me to take this back off as soon as we go through this. Otherwise, it really makes it hard to see the screen. But this is a section of exclusions within a homeowner policy. And it talks about water damage right here. So obviously the first word here is flood. That is excluded from the policy. But then it goes on to talk about surface water, waves, tidal water, or overflow of a body of water from any cause. We do not cover the spray from any of these, whether it is wind driven or not. Water from any source which backs up through sewers or drains, which is another common loss that people have. Water which enters into and overflows or accidentally discharges from within a sump pump system, a sump pump well, a sump pump well discharge system, or other type of system designed to remove subsurface, again, below groundwater, excuse me. And then regardless of its source, water below the surface of the ground, this includes water which exerts pressure, hydrostatic pressure on a foundation that will cause the walls of that foundation to bow and in some instances to collapse. So this gives a pretty complete, although it is not absolutely complete, a pretty complete description of the types of things that would not be covered in a standard property insurance policy. So with that said, I keep referring to the fact of a standard property insurance policy. There are endorsements that can be added to property insurance policies to give you coverage for specific events, such as a sewer or septic backup into the home, or the overflow or failure to get rid of sump pump water. You know, it's kind of an odd thing. You work to manage water below the ground by taking it from the outside of the building and purposefully bringing it inside the building into a sump pump system, which then has to push it back out. And the reason for that design is to lessen the amount of hydrostatic pressure that would be located outside of the house, which is going to ruin the foundation walls. So we're doing an act of purposefully bringing water into the house for a good beneficial reason. But then if there's a failure of that system, if the sump pump does not get the water out of the house, then all of a sudden we have a problem, and that has to be added to an insurance policy, a property insurance policy by endorsement. And I believe virtually every company offers that as an endorsement to the policy. And so unfinished basements, you have less of a likelihood of a need for that, but certainly a finished basement should absolutely have a good discussion and a good understanding of what is and isn't covered by the policy and whether or not you should purchase additional coverage. So that's really the makeup of a homeowner policy, again, which is the most common policy that is purchased when a home, when somebody has a home and it has a mortgage on it and the bank says you have to have homeowners insurance. That's the most common type of insurance that is bought. Are there any questions on that, how a homeowner policy works and how it is structured?
I guess, Phil, this really strikes me as a homeowner, it's not just your house structure. It is very much the land around you, how dry or wet that land is, and knowing the risks that your structure is then bearing.
Right. Yeah, absolutely. Homes that are built in sandy soil can shed water much quicker than homes where we are here, where we have a lot of clay-based heavy soils, and they will retain all of that moisture. The decision to have a house with or without a basement, you know, certainly as we were talking before this all started here, living on top of the hill versus living at the bottom of the hill, and so on. I just wanted, that was the bleak part of a homeowner policy, but there's a tremendous amount of coverage that does come in a homeowner policy. Water damage coverage is primarily associated with the plumbing system. Now, I know we talked about the backup of a sewer, which is also part of the plumbing system, but that's the backup of something that is being fed by a municipal system and not on your own property. But you know, certainly water that overflows from a sink or a bathtub, water that overflows from a toilet, water that comes from a broken water pipe. A couple of weeks ago, we had a connection of a new dishwasher that had gotten installed and it did not get tightened properly. And by the end of the day, the kitchen floor was all underwater. So those types of things, ice makers, the fill line to an ice maker is another very common type of water that gets into the house, causes damage, and the insurance policy takes care of all of that type of damage. So it isn't all bad. There's a lot of good in there as well. But with that, moving on then into flood insurance itself, and talking about kind of the definitions of flood and when it would be appropriate to have that. So I do want to start by reading the federal flood insurance program, the definition. So it says flood is defined as 2 or more acres of dry land, or the inundation of 2 or more properties where there is surface water covering 2 or more of those properties. Okay. So when you think about that, and if you have a home and if you have a 1 acre lot and it has a low point in it, and whether it's water coming from a creek or a river, or whether it's the pooling of torrential rains, in these 6, 7, 8, 10, 12, 14-inch rain events, if that water were to pool in your backyard and then ultimately come into your home, that would not be considered a flood because it did not encompass at least 2 acres, or it did not impact at least 2 properties on that surface level. And again, talking about the seepage and underground water, flood deals with surface water. So again, it's another one of those items where we as insurance people, insurance professionals, have to accurately communicate what these definitions are so that people have the proper expectation. If I give you $700 for a flood insurance policy, by gosh, I want to be covered if I have any water damage in my house, and that's just simply not the case. You don't necessarily need a FEMA declaration of a flood, but you do have to have suffered an event that met the definition of a flood, which is water that covers at least 2 acres or water that covers 2 properties.
Still, one of our participants suggested that it might make a difference in the wording that you put on the claim, that could help you get your funding.
Okay. We usually encourage people to use what we deem to be the most beneficial wording. But, in this particular instance here, I mean, people are going to come out with a tape measure. I mean, they're going to figure out exactly the dimensions of this thing. We do encourage everybody to take photos, take as expansive a photo as you can, especially if we're dealing with this definition of did it encompass 2 acres or did it encompass 2 properties? Because as we have all experienced, the water is there 1 hour and it is not there the next hour, right? And we hope that it didn't leave anything left over while it was flowing through. So these levels go up and they go down so quickly that we really encourage people to gain any evidence, any documents that they can to be able to substantiate that. But yeah, I think in general, most insurance offices will work with their clients based on experience, to make sure that there is a communication that sets the claim up in the most favorable, the most positive, and the most successful light. That's a good point, Julie. Any other questions with respect to just simply the definition? Okay. So then once you are, let me rephrase that. So we talked about the fact that most of the insurance is purchased primarily motivated by financing homes. So the mortgage company that you are working with, the bank that you're working with, is going to require that you have homeowners insurance. If you are located inside of or immediately adjacent to a floodplain, Most mortgage lenders now will require that you also have a flood insurance policy. Flood insurance is administered by the National Flood Insurance Program, basically a governmental entity where all of the participating communities, Coon Valley, Chaseburg, Westby actually does not participate in the National Flood Program. Sparta does, Cashton does, because of some of their municipality is in the low area. So if you are in a participating community, all of the properties in that community that are in or adjacent to the flood zone are going to be mapped. And so when you are purchasing a home, the title search and the property search of that is going to lead to the discovery whether you are or are not in the floodplain. If you are in the floodplain, then generally the lender is going to require that you have flood insurance also, in addition to homeowners insurance, flood insurance on that loan. The closer you are to the tributary that would be the supply of the water, the more expensive it is. The further away you are and immediately adjacent to, the less expensive. I mean, we can see a $100,000 property next to the river with a $4,000 a year premium, and that same house, that same value, if it is on the adjacency, the premium might be $350. I mean, it's a huge swing, but obviously that is based on the propensity to have a flood experience, based on being closer to the north side of La Crosse is closer to a flood event at the Mississippi River and so on. The south side of La Crosse with the Pamela Creek project took the majority of those properties actually out of the floodplain. The project was completed and probably 16 years later, the final mapping was completed with getting people outside of the flood zone. But in that 16-year time lag, people were still having to buy flood insurance, even though the risk had been effectively completely mitigated. So it's nothing happens like in any sort of immediacy. So one of the factors that will determine what you have to pay for flood insurance is going to be your elevation as it compares to the source of the water. So whether that's Coon Creek, whether that is the Mississippi River, the Black River, anything, you're going to be measured where you are from there. There is also, when you start to put a flood insurance quote together, the age of the property, whether it was built prior to the formation of all of the flood maps or whether it was built after those flood maps were created, will determine the rate that you pay, or actually the rating program that you fall in. It'll determine that. Your ability to influence the rate that you pay by elevating your home can be accomplished. We would then, if it's after the flood maps were created, then you have to have an elevation certificate, so that, you know, if you've done things, if you hauled in a lot of fill and you built your house up above what the natural property elevation would have been, with an elevation certificate, you can influence what you pay, because now you've done things to reduce your risk of that flood. We've insured a number of properties along the river on the Minnesota side, where you actually have to cut holes in the foundation of your home so that water can flow through that. And there is a very specific dimensional requirement and the number of holes requirement. A lot of people said, well, if I just leave my garage door open, I should be good to go. Yeah, that doesn't work. The flood program has actually installed a number of rules in the last 20 years, because the instances of flood claims has tremendously increased, and the ability to have enough ready money to pay for those claims is getting stressed further and further and further. So the rules of underwriting have really increased over the last number of years. Does any of that jogged anybody's memory with a question at all?
In the like Pamela Creek situation, is there any way that you could complain or ask for a a review of it, say I'm not in the floodplain anymore, would you please take a look?
Until the final mapping was done, there were very, very few successful requests for removal. It did require an elevation certificate. And so the people that were on the fringes of that whole floodplain area probably had the better likelihood of having their property removed. And once you had it removed, it never came back in. But somebody that was really fairly close on the 33rd Street there, I think it is, they, until the flood map was completely redrawn, they really didn't get out of it. They really didn't. They complained a lot. You know, so you tried to do the things that you could. You raised the deductible way up, and then the lender said, yeah, we're not going to let you do that because we still have this risk that we have to have on our books and so on. So many lenders in the La Crosse market put a maximum $1,000 deductible on the flood policies so that people couldn't, you know, buy a $60,000 policy with a $50,000 deductible. You know, for those people specifically who weren't really any longer in the, you know, in that danger area. So
Probably more likely to go the other way, though, that more areas would be included on the floodplain rather than fewer.
right. Any other items at this point?
Phil, there's a question in the chat, and you touched on it a little bit, but it's talking about how is it different in rural townships?
That's a great question. So the rural townships still have the opportunity to participate. They would be linked from a participation standpoint. They would really be linked back to their closest municipality. So the Malvina area, for example, along Highway 27 is linked back to the Cashton flood mapping core. That would be about the best way that I would answer that. So the county has also picked up, the one that I was thinking about was Bloomingdale, and Bloomingdale is in the floodplain, but the closest municipality that it would have would be Westby, which is not a participating community. So I believe that one is actually mapped out and monitored by the county itself. So it's just going to depend on your adjacency to somebody that is a participating community or not. Is that, you think that answers the?
Yeah, absolutely, Phil. That was a great answer. Thank you. And I personally have a question because I'm in the housing market and I look at flood maps frequently.
Okay.
I understand that there are letters typically associated when you're looking at those floodplain maps. Can you tell us what those letters mean, or letters that would trigger a need for flood insurance?
Right. Yeah, that's a great question. And again, that the whole mapping system is put together so that your property can be identified as to the risk that it has associated with its adjacency to the source, the tributary, the creek, or whatever it is. And so, and that's all on a scale from A to Z. And then so the closer you are, it is identified by that score. And then A as a zone distinction also has a numeric. It's like A to the first, A to the second, A to the third, and that will also then associate you with that risk. And then I believe Z is on the outside, or the final adjacency there before you go back out of the flood zone. So, but that's the map is designed with that lettering system, so that is determined for the bank to be able to see exactly how high a risk you have, and then for the flood insurance rating system to determine what sort of a premium you should pay for that exposure. Did that help at all?
Yeah, absolutely. It sounds like I should avoid A on the map if I can.
Yep. You know, and the thing about it is, and I had a very specific instance again down in that Bloomingdale area where there was a parcel of land that was 22 acres, and a portion of the land, not where the home was located, but a portion of the land was in the floodplain. And that took 2 years worth of premium payments and continual correspondence back and forth with the flood administration to get that house removed from a flood requirement. One of the things that they had contemplated was actually to divide the land into two separate parcels, so that the part that was in the flood zone did not have a building on it anymore, and therefore then they wouldn't have to pay flood insurance. But it's an interesting program. And again, flood maps are not updated very frequently, and yet there's a tremendous amount of mitigation work that's being done all the time. And so those two things are kind of at odds with each other. And unfortunately, the property owner is the one that has to bear the burden of that risk. So in talking a little bit more about flood, a building is a building. And so when you add building coverage on a flood policy, you add for the house. You can choose or not choose to have below grade items covered. So furnaces, water heaters, things of that nature. So sometimes when you are looking at a property in a flood zone, you will see that the furnace has actually been moved from the basement floor up to being suspended underneath the floor joist. So it's as high off the floor as it possibly can be. And that was a kind of an interesting practice that was pretty common, probably 15 to 20 years ago, where people were doing that specifically so that they could buy a policy that didn't have to include any below ground coverage, because that was a better premium at that time. You don't see that as much in newer construction, and in fact, you really don't see much newer construction in floodplains anymore, period. But that was one thing that people did in order to try to reduce their exposure and be able to reduce or control the cost of the flood insurance. If you have a garage on your property that is not attached to your house and you want to, or the bank requires you to have flood coverage on it, you actually have to have a separate policy. So unlike a homeowner policy, where a homeowner policy will give you coverage for your house and also give you automatic coverage for detached structures up to a certain limit, and then you can add some additional coverage value there, all in one policy. With flood insurance, you have to actually have a policy for each building that you would have. In some agricultural areas, rural communities, you see that, you know, the barn might be in the floodplain, but the house isn't. And in that instance, they do allow you to put coverage, if it's financed, coverage only on the building that is in the floodplain. It seems kind of odd. I think a barn would probably survive a flood at a higher level than a house would, just because of its design, and it does have kind of that natural flow through thing. But so those are all items that need to be taken into account when you are purchasing a property that may be in or adjacent to a floodplain. On the main policy, the policy that's covering the house, you do have the option to include or not include your contents coverage. And as we talked earlier on the homeowner policy, flood and below ground water events and surface water events are not covered by homeowners policy. And that would be not only for the structure of the building, but that exclusion also applies to the contents that would be lost in that building. So again, if you have an interest in having coverage for your personal belongings, that'll be your appliances, your clothing, your pots and pans, dishes, the stuff that hangs on the walls, all of your electronics, you would have to actually buy a flood policy then that had both structure and contents coverage if you were interested in having them covered in the event of a flood loss.
Hey, Phil, we have a question in the chat. Can a renter get flood insurance if they're living in a floodplain?
Yes, a renter can get, you would just buy contents flood insurance. Yep, that is absolutely available. Yes.
Are there times when you would want flood insurance, even if you're not required to get it?
Yes, I would say yes. So, and again, this now then gets into a little bit of the gray area that we find many people find themselves in. So again, if you are adjacent to but outside of a flood zone, a lender would not require you to have flood insurance, but that may not mean that you don't have a flood risk. Again, when we were talking before about policies can range from $4,000 to $350. If you are located outside of that flood zone, but your community does participate in the National Flood Program, you would be able to buy a flood insurance policy, and you would be at that very low end of the premium spectrum for the what if, right? One of the things here, it says that flood, which is at the 100-year flood level. This is going to be a very interesting statement to read. Flood insurance, it's called the 1% flood chance or the 100-year flood, can potentially happen to you 4 times in a 30-year mortgage cycle.
Hmm.
I'm not sure how, is that the new math on that one then? So if it's
100 divided by 4, no.
no. So, I mean, and it would be, yeah, I mean, it would actually be 100 times 4 because it's
Yeah.
only supposed to happen once every 400. If we have to make mortgage payments for 400 years, we're all in trouble. So, but so anyway, and we saw this happen in Coon Valley specifically, where there were properties that were not actually located in the floodplain that did get damaged by the flood waters. That was contributed by the amount of rain, plus also the retention dams that failed and actually then put those higher volumes of waters in there in a very short period of time. That was another one of those that went up and went down in a pretty concise period of time. But it was clear that it was more than 2 acres and clear that it was more than 2 properties. So there was no question about being able to meet the definition of the flood. But if you are adjacent to flood, I do think that that is something that is worth considering. I think very, very, very few people actually consider it, but it is something that is worth considering. And again, the cost of the flood insurance in those areas that are adjacent to but outside of the flood zone is a lot more manageable than. So now there's also people who feel like they have a flood exposure or at least a partial flood exposure, but they are either not in a flood zone or they are not in a community that participates in the National Flood Program. Because of the fact that we operate around the whole country, we have many areas that are subject to high water events that are not in the floodplain. So American Family, the company that I represent, actually went to Lloyd's of London 4 years ago, and they put together a consortium of people that they actually, the Brits call it a syndicate. Syndicate is not, I don't think that that's necessarily a positive word here based on history and everything like that. At least in my mind it isn't, but that's what it's called. So it's a group of people, and we actually put into place a policy called Flood Plus. And Flood Plus is available for sale to people who are in communities that do not participate in the National Flood Program. The rates are, again, because of the fact that you would be in a property that would be less susceptible to flooding damage. The rates are pretty decent for most of those policies, and the definition of the water damage that is covered is not specifically following the federal definition here of 2 acres and 2 properties. And so there is many, many, many more of those surface water events that would be covered by that Flood Plus policy, but that would still be excluded in the standard homeowners insurance policy. So that's been a very successful program for us here to be able to accommodate the needs of people who felt as though they were in a water subject to water damage of some sort. The other thing that we have tried to do as a group of agents within our company is to put together an endorsement that we can add to a standard policy that would be water damage by any cause. Okay, and we've asked initially here, we've asked for it to be $50,000 worth of coverage. That is something that is also going to need to be, our underwriting people, our company underwriting people don't have the appetite to do that, but we do feel as though we could add an endorsement that was actually coming from another company outside of American Family. And that's an item that we have also shopped at Lloyd's of London to be able to try to put that as an add-on and an add-on endorsement to our policies. Then you wouldn't have to worry if it was seepage through the wall. You wouldn't have to worry if it was, you know, water coming up through the sump pump system. You wouldn't have to worry if it was that pooling in your backyard that then got so deep that it came into the house, because it would be water damage by any cause. We've been working on that for about 1.5 years, and we're making very, very, very slow progress. But I think that would be a real godsend to a lot of people in these areas that aren't traditional flooding areas, but can suffer tremendously with water damage coverage or water
Have
damage.
any sense of how expensive that would be?
I don't think I have a good feel for it. If I was going to venture a guess, I would think it's going to be in the $200 range a year. But again, you know,
Yeah,
if you
you
get a
need it, man, oh
$50,000
man.
Yep, that's right. That's right. So other questions?
I mean, cost is always a big thing of insurance. Is there a way to save money on insurance, or how do you think about it in a way that leaves you some disposable income to do something else?
Right, right. That's a great question. So, you know, the deductible is probably the single biggest influencer on premiums, but the deductible influences premiums based on the starting point. I'll give you a statement here that I totally allow you to challenge me on. So Wisconsin as a state, it's a little different from an auto insurance standpoint, from a property insurance standpoint, but Wisconsin as a state has the 48th most expensive or the third least expensive insurance rates in the country. And so, you know, if you compare a $1,000 homeowner insurance policy here in Wisconsin to a $7,000 homeowner policy in Kansas, where they have high instances of wind and hail, right? When you adjust the deductible on each of those, it's going to have a much greater effect on that Kansas premium because it's starting out so much higher, right? And so, you know, we have people call us for consultations, and we talk about the things that make up the premiums and those influencers. And if we raise deductibles here and we raise deductibles there, and you know, sometimes you go from, let's say, for example, a $500 to $1,000 deductible on a homeowner policy, and it saves you $37 a year. I mean, it's very, very difficult, but that's a product of the fact that our insurance isn't as high as it is elsewhere. When you read all the books about what you're supposed to do from an investing standpoint, they absolutely tell you have high deductibles. It'll save you. The impression is it'll save you thousands of dollars, but it just doesn't. Not here. Maybe in California it does, or New York it does, and those kinds of things. So then it's, you know, it's paying attention to, there's a great Liberty Mutual commercial right now where only pay for what you need, right? A lot of what you need is built into the standard policy, but there are variables that you can put in there. And so having a good understanding of what you are getting and having a good understanding of what you feel you need in insurance will allow you to kind of add and subtract from your policy to make sure that you are paying for what you truly understand you're getting and what you feel that you need. Aside from that, you know, the insurance commissioners, so here we are governed by the insurance commissioner of the state of Wisconsin, and the commissioner's office has done a great deal of work to protect customers. They've really minimized the amount of difference between one policy and the next, so that XYZ company can't have a a option rich policy, and company C have an option absent policy, and the consumer thinks that they're getting the same thing, right? And now it's just, we're talking about price, but the price can be influenced greatly by what is and isn't included in there. The commissioner's office in the early 1980s started to do a reform of policy language, and about every 10 years, each company has to resubmit all of their policy languages. And basically, it's now the policy warehouse. So if American Family wants to start selling a homeowner policy, we go into the commissioner's office and we pull off the shelf the policy language that they say everybody has to have, and that's what we do. So the variance is, and again, the practice was undertaken for the protection of the consumer, so that they would be able to know that they were getting what they thought they were getting. But that has then trimmed the flexibility of what you can add and what you can subtract from a policy. So the ability to have a major influence on the rates by making those kinds of changes is not as great as it maybe was 30 or 40 years ago.
Thanks for that, Phil. There's another question in the chat. And reflecting on what's been happening in Texas with the severe weather, all of those homes that had bursted pipes because of the cold, is that going to be covered under a standard homeowners policy, or is that something that flood insurance would be needed for?
No, that's a great question. And that is exactly the type of a loss that is covered by a standard homeowner policy, because it was the freezing of those plumbing systems. That happens whether there is or isn't heat, as long as the house is an occupied house. So fully furnished, people are living there or recently lived there. Some of those people in those freezing areas got in their cars and headed to somewhere else where they could get some heat and everything like that. Power failure is the driver in those types of events, when your furnace stops working and your plumbing freezes. And so all of those instances where it was an occupied residence, absolutely, that's going to be covered by insurance. There are a couple of idiosyncrasies that do kind of touch on the exclusions in the policy. So if you had an outside water system, let's say you had an automatic sprinkler system in your lawn, and your house was absolutely fine, but the sprinkler system outside froze and broke, and it caused water then to pool up on the ground and come into your house. That would be inside of the exclusion area, because it is surface water from outside the house. Most of the houses in Texas don't have basements, so you probably would have been okay anyway, but that very particular loss would not have been covered by the standard policy. We started adding surface water from an outside source to our policy in 2019. It does have a limit of coverage, but that is the type of an event that is starting to happen more and more and more. Nicer properties are having, all of these irrigation systems installed, especially when you get out into the west, where rainfall is not as plentiful as it is around here. So that's a coverage that we felt was important enough, and so we added that to the policy. But yeah, that was a great question there. I have a niece who lives in Texas, and my brother-in-law is a crane operator, and he was heading back to Texas, and that's happened like the day before he was leaving. So he went over to, I think it was a Menards, and bought piping and fittings and faucets and everything like that to take with him, because people were traveling up into Oklahoma and as far as Kansas, because there was just nothing building material wise available for fixing plumbing down there. That it was such a widespread event.
Wow.
Yep.
Yeah, that's crazy. And I feel like we're seeing the impact even here in Wisconsin for building material, just between COVID and all the other severe weather that we saw throughout 2020 and into the beginning of this year.
Yep.
And actually, the next question in the chat, you touched on through that answer in terms of talking about when that surface water outside does, you know, come into your home, into your basement. But the question was specific around the difference, I think, between what would be considered flooding and that surface water that you had mentioned. So if it's not affecting 2 or more homes, if it's not on 2 acres, if it's just surface water outside of your home that does get into your basement and cause damage, what are the policies that are going to cover that? And I guess, yeah, what can we do about it?
That's a very succinct question, isn't it? What's going to cover it? So again, I'll give you the 2 examples. The first example is that the water pooled as a result of a leak in a plumbing system. Because of the fact that it would be able to be linked to a exterior plumbing system, the new endorsement that we added to our policy would provide coverage for that if the water then came into the house, because it's water coming in from an outside source, an outside plumbing source. Garden hoses that the valve breaks and the water comes back into the house instead of out of the house. Those types of things. If that pool of water outside the house was caused by rainwater, then there's just nothing that's not going to be covered by flood policy, and it's not going to be covered by a homeowner policy. There's just nothing that is available to purchase that would cover that kind of a water event.
At this time, is that the thing you said you're working on?
Yes, right. If we could get the endorsement that says water by any cause or any source, that would be the type of policy language that would be required to be able to cover any and all water events.
Okay. Common insurance advice I hear is to shop around and compare policies with different companies. Is that still a thing, or if everyone has the standard language, is that no longer valid?
You know, it is still a thing. People have different companies have different willingness to price products for market expansion. Some companies will price products for market contraction. And so I would say that even though we are all subject to the same basic policy language, for example, we've decided to add this endorsement for outside or water coming in from an outside source. That is something that we decided to do in addition to the standard. So there will be differing coverages there. Obviously, there'll be a little bit of a different premium as a result of that. But each company gets to, you know, depending on how big or how small the company is, we gain margin from all over the country. You know, water events, hail events, wind events basically don't take place in Nevada, but we write a lot of homeowners insurance in Nevada. And so those policies are, everybody's putting money into the hat. And then if you need to take out, you take out of the hat. So as we diversify our risk and increase our premium portfolio, we are able to charge a different premium maybe than another company would that doesn't have that same level of sophistication within their rating plan. One of the other things I wanted to comment on a comment that was made a little bit earlier, and that's currently. So the derecho last year, the pandemic that shut down a bunch of lumber mills, and the storms that we had and the wildfires that we had last year really caused a real tremendous shortage in the availability of building materials. And so we've seen, you know, this, whether it's a Menards flyer where a piece of plywood used to be $8 and now it's $48 and things of that nature. So what we're seeing is the inflation adjustments that are taking place on homeowner policies in the state of Wisconsin for all companies are expanding at a tremendously high rate this year. So on an average year, a $200,000 house would go up maybe $12,000 in inflation indexing. So that means that every year your coverage on your house goes up a little bit further and a little bit further to keep pace with rebuilding cost for in the event that you have a fire or a tornado or something like that. Well, what we're finding this year is that those things are going up $30,000 and $40,000 in those renewal periods, and it's being driven specifically by increased building material costs and the increased labor cost that it takes, because now you need social distancing on a build site. You need cleanup at the end and disinfectant at the end of every day. Every time you change from a plumbing contractor to a heating contractor, there has to be a 3-day avoidance period so that you get a clean environment when you're coming in. And all of those things have increased the labor cost of building a house, combined with the increased building cost. I don't think that that's going to stretch into 22, but it does look as though we'll get to it's adjusted quarterly, and I think we're going to get to the fourth quarter before it even starts heading down to a level of normalcy. So that's another thing that is also, Julie, to your point, also driving up the cost of insurance on an individual policy, with or without shopping around to different companies, because all companies are subject to that same inflation index pile.
It's so crazy, that domino effect, and to think about it in that way. So thank you for that input, Phil. One of the, and it might be one of the last questions we have time for in the chat, comes from Michelle, and she's talking about like our group and how we can help others to understand insurance before they need it. What would you recommend that we do to kind of promote this and get the word out?
Again, it's a great question. You know, we need to make people aware of their property, whether they are marketing and getting a new property or whether they are in an existing property. We have been impacted by events that were basically thought would never happen, right? I mean, the failure of a number of retention dams at the same time was just, you know, when they were put together, it was like, hey, we've cured this problem for the rest of time. You know, and that wasn't the case. So, and whether that's being driven by global warming, whether that's being driven by, you know, the land depreciation, you know, just over time, if it got weaker instead of stronger, you know, so now we're at a point where our ability to fend off high water events in a fairly significant rainstorm is very compromised compared to what it was 4 years ago. And so I think that just the general awareness, whether that's a public service announcement type of a thing, or in conversation, the general awareness has to be, you know, that we need to be much more in tune with our surroundings and with our environment, to see if we now have an exposure that we did not have 3 or 4 or 5 years ago. And if that's the case, then let's start to be proactive and at least have some conversations about it.
All right. Good job. Well, Phil, thank you so much for joining us today. Boy, you're just a wealth of information. And
I can't imagine with that topic that it took 55 minutes, but by gosh, we made it last, didn't we?
good job. We will have a recording of this. So if people want to share that with the clients or other people that they think will be interested, we'll make that available on our website. And if anyone is not a part of our board, but would like to, or our meetings would like to contribute, we would love to have you.